The Indian market is quite volatile. It has been going down drastically, and of course the FIIs keep on selling. So there is a clear opportunity for us in 2025 to find undervalued stocks. So today we are going to see how to find undervalued stocks, and also going to review 11 undervalued stocks that are currently available cheaper. Hello everyone, welcome back to Nandu's Equity. You can use various measures and methods to find an undervalued stock. In general, we look for low PE, high book value, and also PEG ratio between 0 to 1 for entry levels. And of course, we want to compare its peers, and also look for revenue growth, profit growth, strong ROE, ROCE, and low debt levels. And also we do not want to leave the market sentiment, because some stocks get totally beaten down with no reason, and even for some rumors also. We really wanted to check those things. And of course the normal thing is finding its intrinsic value and compare that with the market price. So today we are going to see all these combined into the screener, and then go for 11 stocks. So there are so many different ways in finding the undervalued stock. So also you can select and what levels of market cap you want to look for. So I'm keeping at 5,000 so that we get little better than small caps. And of course we want to go with the P ratio first. So price to earning ratio should be less than 20, and also P ratio less than the industry PE. So this itself will filter out a lot of stocks. Like you got just 110 stocks now, so just by P ratio. And then we want to have a very good entry point, so we can select PEG ratio. So PEG ratio greater than 0 and PEG ratio less than 1 will get a very good entry point, whichever is currently available cheaper. So we again filtered to 70 stocks now. So further, if you go like you may want to see the EPS, which should be more than 10, or you can optimize as much as you want. And also we want to see the earnings growth. You can keep it as that average returns, like for last 5 years more than 10 or 15, so that is kind of giving solid returns for the last 5 years. So that itself filter to 51 stocks. So you can continue like this. You can even add other parameters like ROE, and ROE should be more than 10, and ROC should be more than 10. So like this you can change these numbers as much you want to filter it out. So now we have got about 40 solid stocks from this list, and you can also check that the average returns are not negative, so that it's very clear we have got stocks that are solid for the last 5 years in terms of their profitability. So with this we will jump to our 11 solid undervalued stocks selected from this list, and some might have been selected outside this, mostly not much, maybe 1 or 2. I'll also explain why. From this list we have filtered the number 1 stock in our list is Electro Steel Castings, and which is kind of a small to mid cap company, and current price is quite low at 138 with the high of 236, and it is available quite cheaper from both P ratio as well as a very clear PEG ratio entry level. And look at its EPS, intrinsic value, ROE, ROCE, all are really good. It's also giving about 1% dividend. So this is an attractive undervalued stock. Electro Steel Casting is the pioneer in the production of ductile iron pipes, and very well known in more than 110 countries. So it's kind of a fast growing small cap. So that is why this is attracted with solid valuation. The next stock in our list is KNR Construction. Again, a very good sized small cap company, becoming a mid cap company, available at a very attractive price at 315 with P ratio at 8 and PEG ratio at just 0.34. And of course, very good intrinsic value. EPS, ROE, ROC, all are attractive. And basically this company provides construction services for roads, highways, bridges, flyovers. So they call it as EPC services in segments like roads and highways, and also having focus on irrigation and urban water infrastructure management. So very interesting portfolio, having a lot of orders from the government. So strong order book. So also available at attractive valuation. The third stock in our list is Shipping Corporation of India, which is a strategic player in bulk and container shipping, and currently close to the market cap of 10,000 crore, available quite cheaper at 208 level, at P ratio 9.7, PEG ratio 0.24 only, and with strong EPS and order book. This is kind of a government player where a lot of PSUs and government companies are its customers. So solid order book. And of course, there is a lot of rumors about potential privatization opportunity. So this attracted my eyes. So when we look at SCI as the government play, and from a private part of it, GE Shipping, Great Eastern Shipping is another company. So you can definitely compare these two companies. So this one is from a current price looks very high, but if you look at P ratio and PEG ratio, this is cheaper than Shipping Corporation. And of course you cannot really compare one to one, and this is kind of a well established mid cap company, and from a private perspective, a lot of strong asset base and efficient cost management are its strengths, I would say. And there is very consistent profitability business for this, and definitely available with a very strong intrinsic value, almost 50% more than its current price. So also its EPS and ROE, ROC are quite attractive, and look at its dividend yield. Apart from all this, that's also very attractive. So this is a very clear winner from undervalued stock category. If you are having Apple products or any mobiles for that matter, they're all imported and sold by Redington. So Redington has a very niche market share in this, and there is no competition for this in this particular area. Currently available cheaper from price, P ratio, PEG ratio perspective, giving a very decent dividend yield of 3, and look at its EPS, ROE, ROC, all are quite decent. So it's a key distributor of IT and mobility products with strong ROCE, ROE, and efficient working capital management. Also into cloud and other category of IT services, quite growing faster and steadily. The sixth stock in our undervalued stock list is NMDC. This is kind of gone X bonus. So recently it has come down to just 70 level, and current price is available cheaper from P ratio. However, from a PEG ratio perspective, I think it needs little bit of updation. So we need to see whether it is really 2 because of the X bonus details. And of course available with a strong intrinsic value, EPS, ROE and ROC. So it's a leading iron ore producer with low production costs, and having a very strong operating margins, and also the dividend track record. We have discussed about Oil India a couple of times, I believe, and this is one of the real value find. Last year it was almost half of its price, and it has really doubled and gone up to 700 plus level. Now again come down to 425. Attractive valuation, whether it is P ratio or PEG ratio, and of course look at its intrinsic value. It's really attractive from that perspective, and of course earning per share is really good. So this could be a long-term portfolio stock, and also can be a long-term coffee can portfolio stock as well, and also value buy. The eighth stock in our list is Indus Towers. So whether it is Jio or Airtel, they all depend on Indus Towers, because most of the towers, telephone towers, are owned by Indus Towers in India, having a very strong market share. So currently available at 330 level, and with very low PE and PEG ratio, clearly indicating an entry level, and of course very strong EPS, ROE and ROC, and quite attractive at this moment. So this has very strong cash flow generation from telecom infrastructure leasing, and having a very robust business model. So very clear undervalued stock in this category. The next one in our list is Bharat Petroleum, which is an OMC. OMCs are currently kind of beaten down, and it might even go further down, I believe, because the dollar rupee value is quite bad at this moment, which Indian rupee has gone so weak, it is kind of crossed 85 level also. So there is still further chance of decline in its price. So we can wait and watch and what happens with BPCL. However, looking at its P ratio at 9.5, PEG ratio at 0.34, very attractive. And of course, this gives a very strong dividend, like more than 7% dividend yield. And look at its EPS, ROE, ROCE, all are quite strong. So I feel this could be a strong SIP stock as well, and also clear value find. 10th stock in our list is Coal India, and very well known stock, clear moat in this area, currently beaten down to 380 level. It might even further go because of the market volatility. And of course, looking at its P ratio, PEG ratio 6.5 and 0.4, very attractive price, and having a very strong intrinsic value at 755. And of course, look at its EPS 58, ROE 52, ROC 63. All are quite strong for a very dominant market position in coal mining. And also look at its high dividend yield at 6.7, having a very strong cash flow. So clear undervalued stock. Our final stock in the list is another PSU, none other than ONGC, currently available at 230 levels. Very good P ratio 7.1, and this also gives a very strong dividend above 5 level, and having a very good EPS, ROE, ROC, all that. So now indicating a very good PEG ratio for entry level. And of course, it is having a integrated oil and gas in terms of global E&P presence, and currently available with attractive valuation metrics. Thanks for watching, and definitely this is not a buy or sell recommendation. So please have some careful analysis before you take any financial decision. And of course, share your feedback. What do you think about all these stocks? And if you like this video, click the like button and also subscribe if you have not subscribed. Thank you.